Good morning, everybody. Welcome to our Thursday Q&A session. My name is Sarel Snyman. I head up the online side of the business. We've got Sean, who's our technical analyst and investment specialist, and then we're privileged to have Matt Swart, senior analyst, who covers Naspers and Prosus for us. He's going to take us through his presentation. Afterwards, we're going to take over to Sean to have a look at the technical side of things. And then we're going to open for Q&A. If you think of a question whilst we're presenting, please type it in the chat or make a note so that you can ask it outright once we open the floor for questions. We look forward to your participation. And if you do speak to us over the mic, please switch on the camera so that we can put a face to it. Thank you very much for joining us today. And I'm going to hand over to Matt now to take us through his presentation. Thank you, Matt.
Thanks, Sarel, and thank you to everyone for dialing in. Today we're going to chat about Naspers and Prosus. It's one of my favorite companies to cover. But since our last report, there hasn't been anything significant occurring other than the 10-cent results, which were released in the beginning of March. So we'll chat about those today. Briefly, there was top-line growth of about 10% for Tencent. That was driven by their advertising business and their new fintech and business services. They expanded their margins, which drove the bottom line. There was growth of about 36% there. And then they've also proposed a 42% increase in dividends, and they plan to double their share repurchases. The dividends will flow to Prosus, obviously, since Prosus owns Tencent. And then on our valuation, so we've made very minor intrinsic value changes, and that has been as a result of some minor market value changes for the listed investments, as well as the share repurchases at the Prosus and Naspers level. And then we've got the discount to NAV, which has widened since our last report. And then finally, our recommendation for both of these companies is unchanged, and that's a hold. So let's just have a look at the Tencent results. This chart, which comes from their presentation, shows the contribution to revenue from their main segments. There's three main segments: value-added services, and that grew 4%. Online advertising, which was up 23%, and fintech and business services up 15%. And these percentages that you can see on the screen in the chart are not the growth rates. That's their contribution to revenue. The biggest segment, which is the value-added services segment, also incorporates social networks, and that was flat year on year. The domestic games, which was also flat, and then international games, which was up 14%, but in local currency, it was up 8%. So they're struggling a little bit on the gaming side, and they've cited monetization problems as some of the issues, and some of their main games are getting old. So they plan to turn that around this year. They're planning to launch some new games and also introduce some initiatives to increase the monetization of their games. On the social network side, that's the number to look at. There's how many active users they've got, and they've got 1.34 billion monthly active users, and their fee-based subscribers are now sitting at 248 million. On the advertising side, this is where they are getting growth in the business. It was up 20-odd%, and they've attributed that to some of the new services in WeChat. In China, it's known as Weixin. And what's important to know about the advertising business is that the advertising is not as prevalent as it is in the American company's social networks. The Chinese are much more concerned on the user experience, so that they don't show as many ads per post, that is compared to the American companies. And this could be a lever that Tencent could pull in the future to increase growth. On the fintech and business services, they were up 15%, and that segment was driven by higher fees and wealth management, higher cloud spending, and then increased payment volumes. And then on the margin side, their cost of sales were flat, so that led to some gross margin expansion from 43% to 48%. And then on operating costs, they were only 3% higher, so there was also some expansion there from 20% to 26%. And that basically drove the earnings. So the non-IFRS earnings were up 36%. If we look at IFRS earnings, that was down nearly 40%, but in the prior period, Tencent recognized a gain on their stake in Meituan, and that was not repeated in 2023. So in this case, the non-IFRS earnings are more reflective of their performance. And then finally, Tencent proposed a 42% increase in their dividend. So that should flow to Prosus. In the previous financial year, Prosus received $758 million from Tencent. So it's a meaningful increase for Prosus. Now, just looking at the recent performance of Naspers, Prosus, and Tencent, as you can see here, Tencent, which is the lightest grey line, has underperformed the other two companies quite significantly. The Chinese market has been one of the worst performing markets compared to other equity markets. They're battling with the post-pandemic recovery. There's a housing and a local government. There's a housing crisis and a local government debt issues and geopolitical tensions. And then sentiment towards China also is at a low. Net foreign buying of Chinese equities over 2023 was significantly lower than previous years. And you can see it here in the Tencent performance. Given the level of outperformance by Naspers and Prosus, if Tencent does have a recovery, we do expect it to outperform Naspers and Prosus on the way up. But that's obviously contingent on good execution by Tencent. They've got to launch those games. That's got to be successful. The sentiment towards China must increase. The economy in China must get better. And then, of course, the regulatory environment in China must also be favorable. Then this chart just puts into perspective how big Tencent is as part of the valuation. So the other companies by themselves do not significantly affect Naspers and Prosus. What we've got here is the listed investments and then the rump or the non-core assets. And Tencent makes up about 80% of the valuation. The other listed businesses are worth about 6%, and a big chunk of that is Meituan, which was paid out to Prosus as a special dividend from Tencent last year. So Tencent is still the most significant part of Naspers and Prosus. Here's a updated chart which shows the discount to net asset value. Since our last report, it's widened, and it's currently at about 38% for Naspers and 33% for Prosus. Holding companies will usually trade at a discount. In this case, the Naspers and Prosus management is trying to close it, and they're closing it by repurchasing shares. And that'll continue for as long as the discount remains wide. But at this stage, we don't know what they consider as wide, but it is wider than it has been when Prosus listed in September of 2019. So we should expect repurchases to continue for some time. Then finally on our valuation, so it's hardly changed at all. As I said in the beginning, it's changed slightly because we've now incorporated the repurchases since our last report, and then there's also been a bit of market movement of the listed investments. But I just want to talk about the discount that we apply. We apply 35% discount to Prosus and 44% to Naspers. We've got a very conservative view of these companies given the risks, and we feel like these discounts appropriately account for these risks. We've spoken about them before. It's the VIE risk, the China risk, and then the last one is just a standard holding company discount. So it gives us our intrinsic value of about 575 Rand for Prosus and 2,980 Rand for Naspers, and that's more or less where they're trading at the moment. That's it from my side. I'll now hand over to Sean for the technicals.
Yeah, good morning, everybody. You can see the chart there of Naspers. You can see there also, as Matt mentioned now, the NAV. So you can see it's right in the middle of the screen there. But saying that, if you look at Naspers, the share price has been moving sideways since 2003, January 2003. So the long-term trend, you can say it is a trendless market moving sideways. So the share price is trading just below its, sorry, let me just get this quickly. There we go. Okay. So the share price is trading just below its 21-day and 40-day moving averages, as well as its 200-day moving average. So you can see those moving averages will be acting like a bit of a support level. So the medium-term trend is turning bearish, while in the shorter term, you can see the share price has recently broken out below a short-term, call it ascending support trend line, which will trigger obviously a change of trend to downwards. Saying that, this is that bearish sentiment is confirmed by the MACD indicator. It's trading in overbought territory and giving a bearish signal because it's trading below its trigger line. But also the shorter-term stochastic indicator, however, as you see at the bottom there, is trading in oversold territory, but with no clear bullish signals yet. So yeah, it's a challenge at the moment where we could expect the share price to pull back towards that support zone between 2,975 and 2,834. And as Matt said now, our intrinsic value is around about 2,980, which is within that support zone. So we also, as I say, we got a whole recommendation on it. The way I look at it, if you're considering a purchase, I'll wait for a pullback to those lower support levels and the bullish signals from the technical indicators to confirm a buy as such. Okay, move to the next one. Prosus, very similar, also sideways market. It's testing a long-term support, which also happens to be around that intrinsic value. You can see there in that little purple line in the middle of the screen, about 575 level. So the chart also shows that the share price has been moving broadly sideways in a trendless range since November last year, a much broader range than previously. But It's also trading below its 200-day moving average, and I'm calling the long-term trend neutral to bearish. Although the share price is trading, below its 21-day and 40-day moving averages, I would say the medium-term trend remains bullish until such time those two moving averages, the 21-day and 40-day, cross over each other and both point downwards, and that will give a confirmation of a change in trend to bearish. Saying that, in the shorter term, the share price has recently gapped lower. I think it was Monday, but 3 or 4 days back, having also broken down below that ascending support trend line, and that was used as a trigger or change in direction. You can also see at the bottom here the MACD indicator. It's trading below its trigger line in overbought territory, and giving a bearish signal, very similar to the Naspers chart. And also the stochastic indicator is trading in oversold territory, but with no clear bullish signals yet. So again, I would rather wait to see if that support level holds where it is now, and whether we'll get bullish confirmation from those technical indicators. If it does pull back, we can see that the support zone is between 518 and 492, which I think would offer much better entry levels and obviously more profit opportunities. That's it.
Thank you very much, Sean. Thank you, Matt. If you have any questions, please type them in the chat for us. I'll go there now, and otherwise just put your hand up and we'll get you to ask your question in person. I was looking at what Sean was saying around the technicals, and it's quite clear that Naspers is ranging between 2,900 and 3,400 for a very long time. And as I was looking at that, I was thinking, Matt, the beta relationship between the two stocks should be very close to 1. I mean, what the one does, the other one does, more or less, despite the fact that the cross holdings is largely removed.
Yeah, so they basically they move together. We actually added Prosus to our portfolio. I think it was towards the end of last year. So we've been tracking the performance of both of them since then, and it's been the same.
Why would you add Prosus over Naspers? Is it just because it's cleaner exposure to Tencent than Naspers, and the other assets in Naspers are really not of any interest?
Yeah, so there's really no big difference between the two of them. Naspers does have some of the South African assets like Takealot and Media24, but they are really insignificant. They don't move the needle, and we actually value them. We actually ignore the South African assets as part of the valuation. We added Prosus to the portfolio towards the end of last year, just because together Naspers and Prosus are big benchmark constituents, so it reduces the risks. They're very hard to, because they're driven a lot by Tencent, and Tencent's been very difficult to predict or to value correctly, because the Chinese government is very unpredictable with introducing regulations, so that can cause some big swings in Tencent. And at the time, the discount to net asset value for Naspers and Prosus was the difference was very small. So at that stage was a good time. I think I'd probably prefer when the discount is wide, Naspers over Prosus, because if at any stage they are able to unwind that discount, then Naspers is you've got an asset that performs very similarly, and you're getting it at a discount to net asset value. But yeah, they're very similar.
And like you've mentioned, the discount to asset value is largely in part because of the Chinese regulations, that you just never know what they're going to impose next.
Yeah, so that's we applied numerous discounts to our valuation. One of them that I mentioned is the China risk, and that's basically China considers Tencent to be a strategic asset to the country. They've got 1.3 billion active users on their socials, and on their social their app's called WeChat, and it's basically the only way to do anything in China. If you want to pay for something, use WeChat. If you want to order something, use WeChat. Your entertainment's there, your games are there. So it's a very strategic asset for China, and and we've seen it in the past. They introduce rules and regulations that are, in the United States, when they introduce rules and regulations, there's quite a big lead time and input from lawmakers, and it's not like that in China. So you got, just, very tough regulatory environment, which is why we apply the discount, because they can introduce something that is not favorable.
Cool, thank you. I see Clive says, thanks for a great presentation, Matt and Sean. Agreed, always valuable, says Nolan. I see Swadesh has got his hand up. Swadesh?
Yeah, Sarah, Matt, thanks. So I missed the first part of the presentation. I just joined a little late, but I see generally for holding companies, you'll value it based on net asset value. But me as an investor, if I'm buying a company, I want to know whether the company is profitable or not, or how profitable it is. So from a fundamental perspective, I want to know more like PE, what is the forward PE next year? What are they earning? Because all these underlying companies could be loss makers for all I care. And then you value the net asset value, but they're all loss makers. So have we got a PE analysis or forward prediction of earnings for Prosus and Naspers?
Yeah, so they do happen to be loss making. So everything, as a whole, everything outside of Tencent is loss making, which is one of the other reasons why it trades at such a big discount. Shareholders are unhappy with the fact that management has made basically one good investment, and that investment, through the dividends that gets paid to Prosus, is used to fund all these other, I call them the non-core assets. So their e-commerce portfolio, which at the moment is loss making. They do expect to break even in the next 1 or 2 years. I mean, there are PE numbers for Prosus and Naspers, but they just they're not as applicable to a regular company, because they're not actually earning that. But I'll pull them up for you. If we can take another question in the meantime while I find those PE numbers.
Sorry, then that's my exact point. Now, I wouldn't buy any one of those companies individually. So why would I buy Prosus if all the underlying is not making a profit? With the hope of one day, one of them will be profitable.
Yeah, so that's what I mean. Well, that's their business. They invest in these companies. They try. They either own them outright or own a portion of them. They try to, fund them with capital that comes from Tencent, and then eventually sell them or keep them. But yeah, I mean, just because they're loss making doesn't mean they're worth nothing. There's a lot of companies that are also not making profits.
Yeah.
Okay, thanks.
Yeah, there's
Yeah,
certainly,
but I mean,
certainly are companies with potential that are currently loss-making. And what we tend to do in stock trading is we tend to chase, after a price, and that's after the fact. That's when they start making a profit, and the share price would have discounted that and rallied quite a bit. So just a general comment to bear in mind as well. Colin says, thanks so much, Matt and Sarel. I don't see any further questions. If anybody has a last question. No, I think we can close it here, Matt. Thank you very much for your insights. Thank you for your participation, guys. We look forward to seeing you next week. Sean, do you know what's up next week?
I think it's Capitec.
That's it, right? Then we'll be back with Pierre next week, and we'll be chatting about Capitec Bank. Thank you very much, guys, for your time. We'll see you next week, Thursday, same time, same place. Have a great day. Cheers. Bye-bye.
Thanks, guys. Cheers.